All right, hello and welcome to Camel Finance. I'm your boy Camel, the place where you come and subscribe for all things Bitcoin related, cryptocurrency news, and to see the realist trader on YouTube. I show you every single one of my positions, win, loss, draw. I show you every single mistake if I was to make one. And I give you free trade setups and techniques called out well ahead of time with entries posted in real time. And oh boy, what a week. So I'm going to show you some inflation data because inflation is coming off. I'm going to show you some massive Bitcoin news. Then we're going to get into the technicals because the market is trying to tell us something at the moment, and the market is trying to tell us that it wants to go higher. So without further ado, hit that like button and let's get into this. For a few days, I was saying, look, tomorrow's closes, this was on Thursday I posted this, will be either set up a huge bull trap or confirmed breakouts across the board. My expectation is on the latter as the story continues to be one of liquidity. I also have been saying over and over again that if this melt up rally, this blow off top is to unfold, it will be the most hated rally, the most shorted rally, the most doubted rally the world has ever seen. And that is because it doesn't make sense. But just because it doesn't make sense does not mean it's not going to happen. We had the PCE come in below expectation. We also had the personal spending come in below expectation, and personal income went up. Then we had JPM coming out and telling us that headline CPI year over year is likely falling under 4% by the July print. Meanwhile, Trueflation, a website that uses over 10 million data points to plot the real CPI number rather than the manipulated one that the government reports. As you can see here, the government's currently reporting a 6% inflation rate, but Trueflation already has it on a 4 handle. So to me, this begs the question, is it possible the Fed wants to leave the CPI inflation metrics higher than they are in the real world, just so they can create the illusion that they didn't over-tighten and blow things up? I still think regardless of the inflation metrics, regardless of rate hikes, the market wants to go higher, and you can see that in the charts, which we'll get to in just a moment. But first, let's get into some Bitcoin news. Okay, Jim Cramer's come out and said that he doesn't trust Binance, it's way too sketchy. So we can say RIP and goodbye to the Binance FUD. We had the US Space Force come out and say that the US needs to stack Bitcoin and develop domestic Bitcoin mining industries. What do I even say about that? Other than, at the same time, the US government just sold 10,000 Bitcoin for dollars. And remember, this makes no sense whatsoever. Why would you sell the hardest money on the planet for paper that you can just print an infinite amount of? If I was in charge, I'd probably be printing money and using it to buy Bitcoin. They also have plans, allegedly, to sell another 41,000 Bitcoin. But remember, Bitcoin doesn't care. Bitcoin does not care. Over in Germany, the second largest stock exchange is now fully licensed to custody Bitcoin. So is this something we're going to see? Is this a pattern we're going to continue to see unfold when more and more stock exchanges continue to embrace Bitcoin? JT here posted some very, very nice alpha. You can see here, we've got a flat-topped ascending triangle. And as you can see here, we are looking for this to be a breakout to the upside for a continuation pattern in this bull run. Kuj here is even more bullish, says all green candles from here on out, no good entries, a few violent pullbacks, nation states, wealth funds likely accumulating, the hope of 1 million Bitcoin lures in the masses of retail over 100k, parabolic blow off top could 2x the price in just weeks in the middle of summer this year. So you can see, here's what Kuj is calling for, couple $100,000 per coin by the middle of this year. And the Bitcoin chart continues to get better, because this is a monthly RSI. So you can see here, whenever we've dipped below this pink line that sits just around 50 and then recovered it, we have never come back to revisit those lows. Same is true here. Once we dipped below it and recovered it, we never came back to visit those lows. The exact same is true here. And as you can see at the hard right edge, on a monthly time frame, we are now looking to close above the pink line. History suggests that we will never, ever, ever come back and revisit these lows that were set following the FTX Black Swan event. So just before we get into the charts, I wanted to share this with you. In the red here, these are the gains made in bull markets inside of regular market hours. And on top, you can see the gains made in those same time, in the same bull markets, outside regular hours. The reason I advocate for the daily chart is exactly for this reason. The majority of the gains are held by swing trading, by holding your position overnight. And of course, this is no coincidence. What we see here is the institutions taking the profit away from the retailers and the day traders. Also, quick plug, if you're not following me on Twitter, I've been asked to start posting my longs on Twitter, and so that's what I've been trying to do. It is important to point out that I call these trades out so far ahead in advance. Like, for example, this, I've probably said multiple times, you could take the breakout here or you could wait for a break above the top. I'll show you this chart in just a second. But I call this out well ahead in advance, so you don't need me to post it to Twitter, but I know some of you prefer it, so I've started to post my longs to Twitter. On Friday, I said, look, if this breaks today, I'm long. And of course it did break. So let's hop straight into the Tesla chart to kick things off. Here it is. So nice push up. Have to be open to seeing rejection at the top of this box, don't we? So it could easily still chop around in here. But I thought, given the way everything else is acting, I have no problem taking an early entry here. Now, if you're not in already, then a break above the top of this box, just like we did with Apple, and as I've been saying over and over and over again on this channel, would be fine. Here's what it looks like for Apple. So we set this box, didn't we? We broke out here, could have entered here, I just chose not to. Waited to see where we were. We broke out, retested, and now resuming off. So you could use that as your entry for Tesla if you wanted to. That's how I entered Apple. And if Tesla breaks out here and you're already in, perhaps even from lower down, perhaps you took this breakout from down here, you could always use a breakout retest resumption of this box to move your stop from wherever it is up higher to halfway up the box and add another position, allowing the profit from the first trade to finance the risk from the second trade. Each to their own, of course. So the dollar still looking heavy, hasn't broken down yet, hasn't lost these lows, but it does speak a little bit to being on the edge of a cliff, because lose these lows and there's not a great deal below it. We've got these, and then we'll be into the 90s. So if the Dixie can do that, expect risk to come on massively. We've been talking about the yields looking heavy, and now at least the 10-year seems to be looking even heavier, doesn't it? It seems to want to roll over. Things are starting to really heat up now in the stock market. Now, for a long time, we were talking about being open. We're talking about being open to this rollover into this daily cycle low that forms down here before then having a chance at coming out of this bear market and leaving the bear market behind. However, the whole time I was talking about invalidation coming from a breakout of this purple sloping resistance line, and that's indeed what we've got. Not only that, we've got it on 3 daily closing bases, and there's undeniably this last candle is very bullish. Like, look at the size of it, straight up, no top heavy wicks or anything like that. So this is undeniably bullish, and of course it's recovered this upward sloping red support line as well. I don't see the argument for bearishness here. If you're a bear, you know, the first sign of breakdown would be losing this very steep upward yellow resistance line, support line. But until we get back below this red line now, then I don't see the argument for being bearish. Given we've had the invalidation and the long trigger, it's also reasonable to expect this cycle low to form significantly higher up now. Here's the S&P, the melt up chart. If you've been a long time viewer of the channel, this will be no surprise. We've been talking about this on and off. I proposed this all the way back in the summer of last year. Seemed crazy until it broke out. Then when it broke down here, a lot of people said, haha, told you so. But now look again. Now it doesn't look so crazy, right? Now again, there's nothing to say that this couldn't roll over and then it would look crazy once more. But for now, this is clearly a higher low, a higher low, a higher low with a higher high, a higher high, looking to make another higher high. If we do indeed make a high, like the NASDAQ has done, which I'll show you in a minute, above this high here, if we make a new higher high, then we have an uptrend, because that's what an uptrend is, isn't it? It's a succession of higher lows and higher highs. Look at the NASDAQ. Is this not bullish as bullish could be? Look what we have. We've broken out of the downward sloping red resistance line. This was the bear market trend line. Broken out, retested, resumed off. Then we had a pullback, essentially to look, the breakout level, before resuming. We then broke out of this downward sloping green resistance line. Let me get rid of all these yellow squiggles so we can see what's going on. And now, as of Friday's close, we have smashed through the local high here. This means we continue to set higher highs, as you can see here, and higher lows, as you can see here. The NASDAQ is in an uptrend. It's been in an uptrend since October. Here's the Dow. Again, blue, bear market resistance line, breakout retest, looked really weak here. And now breaking out, looking to repair. So doesn't mean this couldn't roll over, but for now, we continue to be long and strong and see what the market can give. The VIX is down on an 18 handle. Look at the VIX. So have to be open to seeing this spike, have to be open to seeing a stock market crash. But given the closes are so bullish, this to me says we're going to continue down towards mid to lower teens over the coming weeks, particularly if we are indeed going to get this melt up validated. Here's the Russell 2K. Look where it's ended up, right into resistance. So can we add a position over the coming days? I've been talking about this since all the way back here. FTSE 100 doesn't look too bad, does it? Breakout retest resumption. Down here, a couple more retests, and now we're looking to see if we can break out of this downward sloping yellow resistance line. For me, I'm not interested until we can get above this yellow line, but once we do, that can be a long for me as well. Bitcoin still, of course, holding this range. At this point, to me, it says it likely wants to come down and create some sort of bear trap before then it can rocket higher. I will say this, if it continues to range, if it continues to just do this, then we have to be open to this cycle low forming lower down than I've marked it on the chart. But as it stands, one day at a time, long and strong continue to push, not too concerning at this point. Ethereum, similar story, isn't it? So is this going to be some sort of flag that resolves to the upside, or is this going to be a flag that breaks down? Open to all outcomes. I'll let the stop do the worrying on this one. XRP continuing to be a beast. So I was talking about two potential scenarios. One is that we hold this line and we just continue to sort of pump up here. That would, of course, be the most bullish interpretation, the most bullish outcome for XRP. But one thing I am very open to is seeing this morph into some kind of distribution pattern like this and then break down. So if that's the case, I'll be trying to set some sort of trend line that's less steep than the current one and exit in the trade on a technical breakdown, ready to then draw a trend line and buy the breakout again from wherever it forms lower down. So keeping a very firm eye on this. For now, there's really no way of knowing whether this is just going to blast off on Monday next week. I mean, that might seem crazy to you, but if you zoom out, you can see that that's what it likes to do. It just likes to explode to the upside. But like I said, still very, very open to seeing some kind of topping pattern that then does that. So we'll see how it goes for XRP. All I really care about is not taking a loss on this trade. I want to try and lock in as much profit as possible, whilst also giving it the room if it's going to pump to potentially pump. The crypto related equities, Coinbase relative weakness here, isn't it? It has not broken out this range. It's not following Bitcoin. You know, if this was tracking Bitcoin, it would have been well out of here by now and basing up here, but it just isn't doing that. Now this gap down, this nasty gap down here was fueled by the SEC suing Coinbase. So perhaps that is the reason why people are hesitant to get involved here. But I would think if the stock market and the wider rallies are going to occur, then what we will see is Coinbase eventually catch up to here and then break out. MicroStrategy, much closer to copying Bitcoin's price action, isn't it? We've got this kind of range, this undeniable range. If we can get above that, then I think it's full bull mode for MicroStrategy. RIOT is doing much more like what I'd expect to see all four of these stocks do. So I'll show you Marathon as well. That'll be the fourth stock. RIOT's doing much more like what I thought. We got this breakout, it's consolidated, it's broken out, it's made a higher high above these highs, and now it's made another higher high above these highs. So we are getting right up into this range here. If we can get above those, then there's not a great deal above. There's, 13, and then there's 18, and then after that, there's the 20s. So RIOT is behaving exactly how I want the rest of these stocks to behave. But obviously, I have no control over what's going to happen. All I can do now is remain long and strong and continue to push all four of these assets and hope the other ones start to catch up RIOT. But RIOT undeniably showing both relative strength and leadership. Lastly, here's Marathon. So you can see breakout retest, looking for that resumption. Hasn't quite done it yet, but I think a break above this level here, and we will see massive, massive, massive upside because there's not really a whole lot until we get further up. So that would be nice to see for a Marathon. There's a good 50-odd% gain back into this range and to this local high here to catch up RIOT at 115%. So I'm sure good things are going to come from all of these blockchain-derived stocks. For now, it's just a case of remaining long and strong and seeing what the market can give. Gold, is this a bull flag? Is this a bull flag that's going to break to the upside? Or is this about to break to the downside like my little squiggle suggests here? We've got our line in the sand. If this does indeed make it up here without getting a severe rejection, and it does something like this, then we have to get involved here because a break to new all-time highs would see gold likely targeting at least 2,500, if not higher. But I ask you the question, why gold now? Why gold now? If the stock market is closing as bullish as it has been, if the stock market is really breaking out and leaving behind a bull market, if the NASDAQ and tech are really leading like they are, I mean, this is as bullish as you could possibly want it to look. Do we need gold and silver to fly at the same time? Now, there's two arguments here. One is that if this is just a liquidity story, if liquidity is just going to flood the market like I think it is, like I've been saying it is, and which is going to drive stocks higher, then is some of that excess liquidity going to find its way into gold? Is that what we're going to see? And if that's the case, then are we going to see stocks and gold all move to new all-time highs at the same time? That's quite possible. We can't rule that scenario out. But to me, historically speaking, gold and the Dow trade inverse to each other. So if the Dow is going on and setting new highs, gold usually isn't. And when the Dow is falling significantly, that is usually the time when you will see gold run to new all-time highs. So it doesn't mean that they both couldn't run together. But if this move in the stocks is for real, if this move in risk is for real, like I suspect it is, then to my mind, it makes more sense to have the metals dive one more time into the summer, which would give the rest of the risk assets space to reach their all-time highs. And then we can see both of these assets turn around and go the other way. Then we'll see the stocks come off, as shown here in the melt-ups. We have this blow-off move in the stocks, followed by the stocks rolling over. And that would be the time, as the stocks are rolling over, for gold to finally then start to shine. So we'll see how it goes. As ever, one day at a time. I am very, very open to buying the break on everything if we can get gold above its old prior all-time highs. And if I zoom right out here, you'll notice we have this 12-year plus, 13-year cup and handle. So if this thing really is going to break, if it is going to clear this blue range here, then we do have to get long, because there's nothing to say that at the absolute minimum, you would likely get something like this unfold out of the top of here. So I hope you enjoyed that. I hope you're as excited as I am for next week. We do have to be open to seeing some dips and some pullbacks along the way, but so long as we continue to make higher highs and higher lows, then this melt up is more validated than it's ever been. I am simply unable to have the conviction that some people have, where they sit here and call anyone that's a bear or anyone that doubts the melt up a idiot or brainless or whatever. I don't have that kind of conviction. I've been in the markets too long. I've been humbled too many times. I have to take things one day at a time. Whilst this looks more validated than ever before, particularly if we can clear the high from back here like the NASDAQ has, I am more confident now about this playing out, this coming to fruition, than I ever have been. And remember, I proposed this all the way back in the summer of last year. But like I said, I'm not going to sit here and say, that's it, good game, GG's, it's done. I'm not going to say that because I've just been in the markets too long. I have too much experience in the markets. I know full well that this could easily roll over and set new lows. Nobody knows what's going to happen. This could also just waddle now. We could spend years doing that. That would be incredibly painful. That would be incredibly difficult to trade through. Now, I don't think that's the case. I think we are in a melt up. I think it's just validated, particularly if we can get above this set of highs here, then I think that opens up new all-time highs very, very quickly. As I often say, this is going to be, if it unfolds, the most painful, most hated, most doubted, most shorted, angriest rally of all time. Because everyone thinks that the only logical outcome given the macro is that we have this 2008 style plunge. I just don't think we're there. I think before we have that huge plunge, we go to all-time highs, as I've been saying over and over again. As I've also been saying over and over again, one day at a time, no bias, no emotion, open to all outcomes. I want the market to prove to me that it's time to get aggressive. And like the sea, like the ocean, I love it, but I also fear it, because it can take everything from you. I'm your boy Camel. In the meantime, take care from me. Enjoy the rest of your weekend. Cheers. Bye.